Instability, conflict. Whenever there's tension in the Middle East, everyone watches the news. But do we really understand how these conflicts shake the economies of the region? Iran-Israel tensions reshape economies, investment, and the future of millions of people. Hi everyone, welcome back to the channel where we break complex topics into simple, understandable, and sometimes shocking truths. By the end of this video, you'll see why the Middle East's economy is never just about oil. It's about politics, migration, and global investments that shift with every missile fired. The Middle East is a region rich in resources, especially oil and gas, but it's also a region that has seen decades of conflict. And here's the thing. Every conflict doesn't just end in headlines. It leaves behind long-term economic ripples that affect local economies, international markets, and even everyday people. Today, we'll explore 4 major ways conflicts reshape economies in the Middle East: investment uncertainty, oil and energy market disruptions, migration of capital, and long-term structural economic changes. And yes, we'll look closely at the current Iran-Israel conflict, which is already impacting global oil prices and investor confidence. First, let's talk about investment uncertainty. In a peaceful country, businesses and investors know the rules. They know what to expect. But in conflict zones, everything changes overnight. For example, in countries like Syria or Yemen, decades of conflict have completely dried up foreign investments. Investors are hesitant to put their money into regions where missiles could destroy infrastructure tomorrow. Even in countries like Israel and Iran, recent escalations have caused major stock market volatility. Investors prefer stability, and when war clouds loom, capital often moves to safer places like the US or European markets. Now let's talk about oil and energy markets, because this is where the Middle East directly affects the global economy. Conflicts often threaten oil production or transport routes. Take the current Iran-Israel tensions. Even rumors of attacks on oil facilities have sent oil prices spiking globally. In 2026, oil prices rose by almost 5% within days of conflict-related news. Countries like Saudi Arabia, UAE, and Iraq see short-term boosts in revenue sometimes as oil becomes scarcer and prices spike. But this is not sustainable growth. It's volatile, unpredictable, and ultimately risky. And it's not just oil. Gas pipelines, renewable energy investments, and even shipping routes are affected. Next is the migration of capital. When conflicts intensify, wealthy individuals and businesses often move their money out of the country, sometimes legally, sometimes underground. In Lebanon, during the financial crisis and political instability, billions of dollars left the country in a few years. Similarly, during the ongoing Iran-Israel tensions, businesses in Tehran are reportedly moving assets abroad to avoid potential sanctions or war-related losses. Finally, let's talk about long-term economic changes. Conflicts reshape economies not just immediately, but for decades. Labor market changes. Wars cause large-scale migration. For example, millions of Syrians fled to Europe, Jordan, and Turkey, reducing the workforce at home but creating new opportunities abroad. Infrastructure destruction. Bombed factories, schools, and hospitals require billions to rebuild. Reconstruction often shifts the economy from growth to survival. Shift in industries. Countries may pivot away from traditional industries. Post-conflict Iraq, for instance, has invested more in telecoms and banking to stabilize revenue streams beyond oil. Even in relatively stable countries like Israel or UAE, conflicts with neighbors often lead to defense-driven spending. Budgets prioritize military and security over infrastructure or education, subtly reshaping economic priorities for decades. Now, focusing on the current Iran-Israel conflict, the impact is already visible. Oil prices are rising due to fears of regional escalation. Investor confidence in both countries is dropping, especially for startups and tech firms in Israel. Sanctions and financial restrictions are affecting Iran's economy, leading to inflation and scarcity of goods. The ripple effect is global. Europe, India, and East Asia, major oil importers, see price fluctuations, and international investors are increasingly cautious about Middle Eastern markets, slowing foreign direct investment and global economic integration. So, what have we learned today? Conflicts in the Middle East. 1. Create investment uncertainty scaring off both local and foreign capital. 2. Disrupt oil and energy markets causing volatility in global prices. 3. Trigger capital migration, weakening domestic economies. 4. Lead to long-term economic restructuring, shifting priorities and sometimes even paving the way for new industries post-conflict. If you found this breakdown interesting, make sure to hit the like button, subscribe and comment below. What do you think the Middle East's economy will look like in the next 10 years? Thanks for watching, and remember, always question, always learn and never take headlines at face value. See you in the next video.